Breaking news today as Bank Indonesia cuts interest rates amid growing economic pressures. I'm bringing you the latest from Jakarta, where the central bank has just slashed its benchmark rate by 25 basis points to 5.5%. This marks their second rate cut this year, signaling serious concerns about Indonesia's economic growth. The decision comes after disappointing first quarter results, showing Indonesia's economy expanded by only 4.87%, down from 5.02% in the previous quarter. This slowdown has prompted Bank Indonesia to revise its full-year growth forecast down to between 4.6% and 5.4%. What's driving this decision? Several factors are at play. First, inflation remains remarkably low at just 1.17% in April, well below the central bank's target range of 1.5% to 3.5%. This gives policymakers plenty of room to stimulate growth without worrying about prices spiraling out of control. Second, the rupiah has stabilized and even strengthened slightly against the US dollar recently, rising about 1.13% since early May. This currency stability provides a perfect window for the central bank to focus on boosting economic activity rather than defending the exchange rate. Perhaps most significantly, ongoing trade tensions between the United States and China continue to cast a shadow over the global economic outlook. Bank Indonesia Governor Peri Warjio specifically mentioned the evolving nature of President Trump's tariff policies as a major concern for Indonesia's export-dependent economy. This rate cut doesn't happen in isolation. Indonesia is joining other Southeast Asian nations in easing monetary policy. Thailand, Singapore, and the Philippines all cut rates back in April, though Malaysia held firm this month. This regional trend reflects how ASEAN economies are navigating the challenging waters of global trade uncertainty. Looking ahead, Governor Warjio has pledged to continue monitoring opportunities to support economic growth while maintaining rupiah stability. He's also urged Indonesian banks to lower their lending rates to help stimulate loan growth in the private sector. For those watching Indonesia's markets, the country has attracted positive attention with 5 straight months of net foreign buying in its bond markets, bringing in about $2 billion of inflows so far this year. This vote of confidence from international investors suggests that despite current headwinds, Indonesia's long-term economic fundamentals remain attractive.